Joining me now with $500 million in assets under management, KERUX Financial CIO, David Laut. All right, David, how high do you see it going?
Well, we mentioned 7,300 by the end of next year, but I don't think it's going to be a line that goes straight up. There's more optimism than there has been, which is a little ironic given how good the market has been and kind of going into a little bit more challenging time. We know that midterm election years aren't great. We see rotation happening out of the growthier areas of the market. Look at the equal weight index today outperforming both the NASDAQ and the Dow. So I don't think we're going to have a straight line up, and we're looking to rotate into some more economically sensitive sectors that might not be quite as tied to the AI trade until we get a little bit better valuation next year.
But are they tied to GDP? I mean, we've talked about Q3 GDP north of 4% and sort of an acceleration next year. So when you say economically sensitive sectors, are you betting on further growth?
Yes, absolutely. So we know that the Mag 7 has driven the market and had about 50% of the returns in the last 5 years. That trend probably doesn't change if we have a good year next year, but I think we might get a reset. In the meantime, we're looking at financials, industrials, and energy as opportunities to continue to have growth, benefiting from falling interest rates, benefiting from a robust economy, but maybe not looking to technology as the place to start the year, and maybe looking for an opportunity to dip our toes into it, just like we did in April later next year.
My guest at the top of the hour also liked industrials. Is there a fear that everyone likes industrials, and is that a crowded trade, or am I speaking way too soon on that?
Well, it's hard to say. It's not the largest percentage of the S&P 500. So when we like it, we're not putting all of our money there. But I do think it's wise to say, hey, what are the benefits here? We've got some tax benefits from reinvesting next year for companies. That will be positive. We have some tax cuts at the corporate tax rate that could be positive for industrials. And as the infrastructure of AI is built out, those sectors will benefit. Oh, by the way, we were just listening to Trump and Benjamin Netanyahu. That's the geopolitical front. You do have some defense companies in that sector as well. And so when we look at kind of some of those geopolitical risks, there's some opportunity within industrials there too.
Energy, I only have 30 seconds. Crude's at 58. Do energy stocks outperform energy?
I believe we are looking at energy stocks as the opportunity. We like the yield that's associated with them north of 6% in the index. And we also think that that's a defensive play when you look at uncertainty geopolitically, as we see XLE outperforming today.
David Laut, really appreciate your time. Thank you so much.